Hello everyone, and as we go into the London Open, US stocks, indices, futures indices really not holding up as well as one might have hoped given the euphoria over the jobs data on Friday. In fact, the last several hours are seeing a very heavy kind of US futures market, and that could perhaps weigh on the London Open as well. On the currency front, a little bit of consolidation after that bounce for most currencies against the US dollar on Friday. Gold is getting interesting again. It could be that gold might have made a low. It doesn't necessarily mean all commodities have made a low, because gold does tend to have a life of its own. Economic data in Australia today, very interesting. Retail sales up 0.4%, but that's a decline from its previous level. And in fact, over the last 6 months or so, retail sales had that little bit of a bounce looking good a couple of months ago, but that has quickly faded. So retail sales look not too exciting in Australia at this stage. On the same day, we've seen building approvals in Australia fall quite dramatically. We've seen the AIG construction PMI roll over further again. So both the construction industry, building approvals, home approvals are looking quite weak in terms of trajectory now. So it could be that all of that stimulus boom and euphoria is behind us. Of course, not all of it, but most certainly the peak. And we're going to be in a situation of ever higher inflation. In fact, the PMI data for construction showed that both input prices were at record highs in terms of their increases, and so were selling prices. So inflation there's just a massive inflation wave about to hit the Australian data series. It's already there out in the community. The inflation is rampant, and it's just going to be a month or two as it begins to sharpen the data. The Reserve Bank's between a rock and a hard place because the stimulus boom is over. It needs to get rid of its ridiculous bond buying program, and inflation is going to be completely out of control. So whereas markets were celebrating everything's euphoric and nirvana going into the future, nothing could be further from the truth. The distortions of the stimulus measures, the supply chain disruptions, they're about to come back now with perhaps even greater impact in terms of the unpredictability of what we now face in the economic front. So I certainly wouldn't be buying stocks and walking away at this stage. I'd be still very active and diversified in my approach. And the Australian market, stock market itself today, has been really a non-performer. And I guess that is because people are worried what the RBA will say tomorrow, because perhaps like me, a lot of people are realizing what the RBA should say is we shouldn't have a bond buying program, never should have had one, and we've got to stop it straight away. They won't do that, but I guess markets are going to wait to see and what is said, get that out of the way. I'm sure most people in the market are looking to buy as soon as all of that is over, but I'm not sure that buying will last very long, more than a few days. I still think the Australian market is very vulnerable to the downside. So is the Australian dollar. Perhaps euro and sterling could bounce a little bit better than the Australian dollar does. Gold looks interesting. Economic data also in Japan, not good data today. Fair bit of weakness there again. The services index in Japan really down for the fourth month in a row, into contraction area. So things are not this nirvana global economic boom that you keep hearing out of Wall Street economists. I think they're really missing looking out their window, because I like to call what I do look out the window economics, looking out their window to see what's really going on in the real world and applying common sense. Again, the counter-argument, of course, there's just too much cash in the world. But I think reality is going to catch up with this stock market, and I would continue to suggest very active management and a diversified portfolio. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.